In the fast-moving world of finance, every second matters. A small shift in the market, a single trade, or a tiny data signal can mean the difference between massive profit and devastating loss. For decades, humans have been the decision-makers, analysts, and strategists behind financial systems. But now, something extraordinary is changing the way money moves. A silent revolution is taking place, led not by people, but by machines that can think, learn, and decide. This is the era of artificial intelligence in finance, and it is reshaping everything we know about banking, investing, and the global economy. Artificial intelligence, or AI, is the science of teaching computers to mimic human intelligence. It allows machines to analyze data, recognize patterns, and make predictions with astonishing accuracy. In finance, AI means using data and algorithms to understand markets, predict risks, detect fraud, and even make investment decisions automatically. From the apps we use for online banking to billion-dollar hedge funds, AI has quietly become the invisible engine driving financial decisions across the world. Everyday banking is now deeply influenced by artificial intelligence. When customers open a mobile app to transfer money, apply for a loan, or check account balances, AI is working behind the scenes. Chatbots powered by AI answer millions of customer questions every day, making banking faster and more accessible. Fraud detection systems use machine learning to analyze thousands of transactions per second, instantly flagging anything suspicious before real damage occurs. Even credit approvals are now data-driven, using AI to evaluate credit history, spending behavior, and even digital footprints to decide who qualifies for a loan. Major banks like JPMorgan Chase, Bank of America, and Wells Fargo rely on AI systems that can read and understand complex documents in seconds, saving countless hours and minimizing human error. But AI's most fascinating role lies in investment and trading. The image of traders shouting orders on a noisy exchange floor has been replaced by silent servers running powerful algorithms. These algorithms monitor global markets, digest financial news, and even analyze social media sentiment, all to make split-second decisions that humans simply cannot match. This practice, known as algorithmic or quantitative trading, allows AI to execute trades in microseconds, identifying opportunities long before human analysts notice them. Some hedge funds use satellite imagery of retail parking lots to estimate company performance before earnings are announced, giving them a predictive edge. Renaissance Technologies, one of the most profitable hedge funds in the world, is famous for relying on machine learning and artificial intelligence to guide its investment strategies, often outperforming traditional human-managed funds. AI is also revolutionizing risk management, one of the core pillars of finance. Traditional risk models depended heavily on historical data and expert intuition. AI, however, takes this to another level by processing enormous datasets from economic trends and political events to global news and social media chatter in real time. Machine learning algorithms identify hidden relationships and subtle warning signs that humans might overlook. Banks and financial institutions now use predictive analytics to forecast potential defaults, detect risky clients, and anticipate market volatility before it occurs. The ability to process such complex information helps prevent crises and maintain stability in an increasingly unpredictable financial world. Another area where AI is making a powerful impact is fraud detection and cybersecurity. Financial crimes are becoming more sophisticated, but AI is fighting back just as smartly. Modern fraud detection systems learn from past behavior, continuously adapting to recognize new forms of fraud. If a credit card is used in 2 different countries within minutes, AI immediately detects the anomaly, blocks the transaction, and alerts the user. Companies like Mastercard, Visa, and PayPal use deep learning systems that identify suspicious activity even before fraudsters strike. These systems have saved billions of dollars and built greater trust between financial institutions and customers. Artificial intelligence is also transforming wealth management and personal investing. What was once reserved for wealthy clients and private advisors is now available to anyone with a smartphone. AI-powered robo-advisors such as Betterment, Wealthfront, and Schwab Intelligent Portfolios provide automated investment guidance based on individual goals, risk tolerance, and time horizons. They adjust portfolios automatically as markets shift, offering personalized strategies at a fraction of the cost of human advisors. This democratization of financial advice means more people can invest wisely, build wealth, and secure their financial futures using the power of AI. On a larger scale, AI is changing how entire economies function. Central banks use AI to monitor inflation, analyze spending patterns, and make data-driven policy decisions. Governments employ machine learning to detect potential economic crises before they escalate. Regulators use AI to identify insider trading, money laundering, and market manipulation in real time. These technologies create a financial ecosystem that is faster, more efficient, and potentially more transparent than ever before. However, with great power comes great responsibility. The rise of AI in finance brings ethical and regulatory challenges that cannot be ignored. What happens if an AI system makes a costly mistake or discriminates in lending decisions because of biased data? Who is accountable when an algorithm causes market disruption or fails to detect a threat? As AI becomes more involved in financial decision-making, regulators and policymakers must ensure that transparency, fairness, and human oversight remain at the core. Protecting data privacy and preventing algorithmic bias are crucial for maintaining trust in AI-driven finance. Looking ahead, the future of AI in finance is both exciting and uncertain. Experts predict that in the next decade, AI will manage the majority of financial analysis, portfolio optimization, and market forecasting. We may soon see a fusion of AI with blockchain technology, creating intelligent systems that are not only fast but also transparent and secure. The emergence of quantum computing could further amplify AI's analytical power, enabling instant modeling of complex financial systems and real-time risk assessment on a global scale. Yet, despite all these advancements, one truth remains: human judgment will always be essential. Artificial intelligence can process data faster than any human, but it cannot replace the creativity, empathy, and ethical reasoning that define us. The best financial systems of the future will not be driven by AI alone, but by humans and machines working together, blending logic with intuition, data with wisdom. Artificial intelligence is not here to take over finance. It's here to make it smarter, faster, and more inclusive. It helps us understand risks better, make informed decisions, and open financial opportunities to people around the world. The real question isn't whether AI will change finance. It already has. The question is whether we are ready to evolve with it. The future of money, markets, and decision-making belongs to those who can harness the power of artificial intelligence responsibly, ethically, and intelligently. The machines may be learning, but it's still up to us to teach them the values that define progress. The age of AI in finance is not tomorrow, it's now.